Right, good morning then everyone as we head into European trade on Tuesday the 26th of March. We'll have a quick flick across the headlines, see what's going on, what's up, what's down as we jump across to the charts. And pretty, I'd say, discombobulated markets really. Dollar weakness yesterday, yields pushing higher, stocks pushing lower. It's not really a combination of things you would see too often. I mean, you've seen dollars push higher, stocks push higher and yields push higher over the last number of months, or days and weeks where we've seen that over the last number of months. But yields pushing higher, dollar pushing lower, not really a combination of things you see too often, but we'll have a look at that once we get around to it. Bank of Japan maybe less dovish than markets think. Dollar eases, yen finds floor from Tokyo's jawboning. They continue to jawbone the currency. Jawboning mean talking about the currency in order to prop up the price of it. The Bank of Japan has ditched its dovish forward guidance in favour of a more data-dependent approach to policy deliberations after ending negative rates. Sources say keeping the door open for another near-term hike in borrowing costs. I'm not sure about near-term hike in borrowing costs. Ultimately inflation's not that, still within kind of 2 to 3%. It was 2.8% last time round, so not exactly a massive push higher in inflation. They will want inflation to stay at that kind of price, maybe 2.5 up that kind of percentage. So not going to want to hike rates too much in order to kill that. So if they can kind of boost wages and get wages to continue boosting, that hopefully should, for them anyway, hopefully should put some upwards pressure on inflation. But weird saying hopefully put some upwards pressure on inflation, but that's kind of what Japan need after 30 odd years of no inflation. The rest of the countries across the world are a little bit different. So dollar yen downside off the back of that. Maybe dollar yen's not the best one to pair it against. Something like maybe sterling yen after the Bank of England last week. It kind of brought forward prospects of rate cuts a little bit earlier than what markets first thought. So maybe sterling yen downside, something to keep an eye on over the coming weeks ahead. Apart from that, I can't find an article. Sorry, I can't find an article here, but oil had its pop higher yesterday, pretty aggressive pop higher yesterday off the back of them in Russia, pumping 9.5 million barrels per day over the month of February, have been ordered by the government to cut that down to meet OPEC requirements of 9 million barrels a day, so that reduces supply of oil. Obviously, with the kind of tensions going over there with Ukraine trying to hit oil refineries, that kind of further causes problems with supply. So multiple other reasons, obviously the situation going on in the Red Sea and stuff. So that is something that is positive for the price of oil, kind of reduces supply, although the UN have passed an agreement to call for a ceasefire in Gaza. Calling for a ceasefire from the UN doesn't mean either side is going to stop. So we'll have to see how that pans out. Maybe they make some progress on that and do get them to kind of calm down a bit and come to some sort of an agreement as to how they will move forward. But it hasn't happened in many years. I can't imagine that happens anytime soon, to be perfectly honest. But you can see equity futures green across the board in the US. Had a bit of upside kind of the past couple of hours. Not massive amount, but have had a bit of upside the last couple of hours against what had gone on yesterday, with a bit of downside in yesterday's session. European stock index is mixed across the board. Not much to see there. Asia Pacific equity indexes, Asia Pacific equity futures higher across the board, so relatively positive across the equity markets, but not a massive amount. Oil slightly lower in today's session, but was up. You'll see the upwards move when we get around to the charts tomorrow a little bit later on in this video. Bond yields relatively mixed, not much to see there. US dollar mixed, not much to see there. Australian dollar down across the board. You'd probably expect that to be higher with Asia Pacific equities higher across the board, but that's not materialized. Now sterling a bit of upside, Swiss franc a bit of downside. Swiss franc downside completely understandable when you look at what happened with the S&B last week. Calling for that hopefully to continue in the coming days and weeks ahead. But flick across the charts and have a look. You can see equity markets slightly higher today, but continuing that downwards momentum from kind of Thursday, Friday into Monday. Yes, they have had a bit of a pop higher today, although I still kind of stick to the script. I'm not sure how they really push higher at kind of much of an aggressive pace, certainly in the near term. We get some economic data from the US a little bit later on. Maybe that kicks markets into gear, but US dollar has had a bit of a pullback. It does just look like a pullback for now. I mean, I still back dollar strength. I mean, that's why I said dollar yen's kind of maybe one to leave out, but it kind of looks like a bit of a flag. I mean, you see the aggression from the move lower back end of last week. Then you see the kind of grind higher yesterday on all these, your Aussie, Kiwi, Euro and Sterling. Not exactly moving higher at any sort of an aggressive pace. Dollar Swiss already starting to push higher. Dollar CAD, big upside in oil yesterday. Did not manage to kind of relate to big upside in the Canadian dollar. But if you want to sell any of these, I mean, I don't think sterling's a bad idea. You know, Aussie, the RBA last week kind of didn't get the follow through with the jobs data from Australia last week, so maybe we'll give that one a miss. But I do think cable downside may be something to keep an eye on over the course of the rest of this week. Bond yields though, what to do with that? I mean, they're higher yesterday and the dollar is lower. If they continue to move higher, maybe it helps the US dollar higher, but yeah, it's a little bit tricky to work out. Markets a bit, as I said earlier on, a bit discombobulated at the moment. Bitcoin reaching fresh highs, had a good weekend. Saturday, Sunday aggressively rallied yesterday. Monday session back above 70k, back above 71k. We're projecting 7150 at the moment, but I mean, yeah, the bias still remains tilted to the upside with Bitcoin. Dips probably should have been bought last week, although it did move lower aggressively. But any dips on Bitcoin, you have to jump in and buy them. But I still do think equities look somewhat vulnerable, regardless if they're a bit positive. Beginning of today's trading, or in Asia Pacific trading today, US dollar, I do think maybe arguably a bit more bullish, which kind of go hand in hand with each other. What yields do off the back of that is anyone's guess really at the moment. But consumer confidence out of Germany above consensus, above previous, but it's still certainly not. Consumers certainly not feeling confident in Germany. Minus 27.4. Still not good figures out of Germany. But durable goods orders out of the US, they're minus 6.1 over the month of January. Now that is January, but you can see you're minus 6.2, so minus 6.1 in the last one. But consensus was minus 4.5. Massive miss on consensus is minus 6.1. Now, let's see what this has to say for itself at 1.1, but it will be, that's 1.1 growth on the minus 6.1 from last month. So not the highest impact of high impact data releases, so I'm not going to sit there actively staring at the chart wanting to trade it like you would with some other data releases. But we'll cross that bridge when it comes to it a little bit later on today. Rest of the week, Wednesday, Thursday, not too much. GDP figures out of the US on Thursday. I don't really care too much about that. It's pretty backwards looking figures, and it also is a final, not the first estimate. So PCE on Friday will be the main focus of attention this week, but we will cross that bridge when it comes to it. Still stick to my script from yesterday. Still thinks equities look largely bearish. Not largely, but somewhat bearish. I still do think the US dollar looks somewhat bullish. Do I say that with a massive deal of confidence? Absolutely not, but you got to try and make predictions in markets. Doesn't mean you have to go and trade, but that's kind of what I think heading into trading today.